Hello everyone, welcome to the Ichimoku.co and Forex Trading TV daily FX market review for the trading day ending Wednesday, January 28th. Firstly to the Euro US dollar, and the second last candle on the chart here is the one we're analysing, this black body candle, and it's a candle that hasn't changed the trend from the previous day's trading. Previous day we had a fairly large white body candle with the buyers taking control. For today we've opened well below the high of the previous day's trading and haven't traded down anywhere near the low, and in bar chart terms this is an inside day. And it's also a potential hook reversal pattern. That's where we have an inside day with the market opening up towards the high and closing down towards the low. And the hook reversal patterns can be quite strong ones, but obviously with all of these patterns we require confirmation. So we'll be looking for the next candle to make a lower high and a lower low to confirm the change of trend. Now, basically it's a reversal pattern because the hook or the inside day suggests that there's a lot of indecision for the uptrend. The buyers haven't been able to clear the high of that previous candle, but also the fact that the sellers have been in control for the entire day from the open to the close, and that suggests that the sellers are really the stronger party here, and it does suggest a very good likelihood of a change of trend. Now the other important thing here is that it's also a potential Japanese candlestick harami reversal pattern. Not much of a trend to reverse here. It's only a one candle trend, but the body of today's body is within the previous. It's a black body as opposed to the white of the previous day, and it certainly does suggest a potential change of trend. Also, we've seen price rejection from the Tenkan-sen indicator for the second consecutive trading day, and that suggests that the sellers do have fairly strong control of this market in all three time frames. As we can see, the market trading below the Ichimoku cloud, the Kijun-sen and the Tenkan-sen, and this bearish price action is supported by the Chikou span being well below the corresponding price action. Now the market is looking a little overextended in the depth away from the Ichimoku cloud, but we don't have any indication of a decent rally here, especially with today's price activity in the market being rejected from the Tenkan-sen. So a good test of whether we are going to see the market retrace in any decent manner will be the Tenkan-sen, whether we find a bullish close up above there. If we look back at recent trading, it's been quite some time since the market's even closed above the Tenkan-sen. The last time was mid-December, so no strength from the buyers here at the moment. Now just looking at the Fibonacci retracement of this first time frame downtrend that the market was in, and we're comparing the new first time frame uptrend to that previous downtrend, and the market has tested to the 50% level for the previous day's trading and today, with the market being strongly rejected from there today. It suggests that there is very good potential for a resumption of that downtrend. Now just taking a quick look at the bands with the Euro US dollar, and here today for the second consecutive day we've seen the market test very close to that upper band and be rejected from there for today's trading, and suggesting that we still have a continuation of this very strong negative bias with the Euro US dollar, and it suggests that there is a very good likelihood of this trend changing, the market testing down perhaps to this swing low, which is roughly around the 111 area. Next to the US dollar, Japanese yen, and still not a lot to talk about here. Another small body candle that's finding support at the Tenkan-sen indicator and resistance at the Kijun-sen, and that's been occurring now for almost a week or so, and it suggests that this is a very, very indecisive market that's trying to make its mind up. There is an opportunity for the buyers, as mentioned previously, if they're strong enough to breach the Ichimoku cloud and the solid resistance extending up to 119.20, but if we see the sellers close down below the Tenkan-sen in a strong bearish manner, we could easily see the US dollar Japanese yen trading down to 115.76, but at the moment just lacking direction in that short-term time frame, and the market's trading between both the Kijun-sen and the Tenkan-sen in that no man's land. Also quite a neutral market in the longer term time frame by continuing to trade within the Ichimoku cloud. And just looking at the bands here with the US dollar, Japanese yen, and also we have the market caught once again between the lower band and the resistance at the middle of the bands, and in a very similar way to what we've seen with the Ichimoku charts. These two, the extreme of this indicator on the downside and the middle of the bands, are acting in a very similar manner as support and resistance, and once these are breached, and significantly to the downside if it is, it would suggest that we have new downtrending price action. As long as we see a bearish close, then bearish follow through, and I say that we'd probably really want to see the market breach this swing low down around the 115.50 area. Now that doesn't mean that we will see the market do that. We could actually see the market breach the middle of the bands, test up here to the upper band and have a go to the upside, but with the market unable to close or even test in a major way above the middle of the bands, it does suggest that there's probably just a slight more likelihood that the next move would be to the downside. Next to the Aussie dollar, US dollar, and here we see this very large range candle, and it's a candle that hasn't changed the trend. It's actually an outside day in bar chart terms. It does say something about the uptrend that the market was in the first time frame. This previous candle making a higher high and a higher low, change of trend on an indecisive candle. It does suggest because the buyers have managed to take out the high, but the sellers have also managed to take out the low of that candle, that there is quite a lot of indecision in the market, and it suggests that the uptrend is certainly not strong. Now the fact that we also have quite a large black body that's formed suggests that the sellers are returning into the market with some downside momentum in net terms, and suggests that there's a very good chance of this trend changing and the market trading to lower levels. Also the sellers have closed with control, and the buyers lost commitment up above the 80-cent round number level, which is a very important area. Now we do have a bearish market in all three time frames, trading below the cloud, the Kijun-sen, the pink line, and the Tenkan-sen, the green line. And if the sellers are strong enough, they could easily test down to the swing low about 78.50, and then possibly down to around the 78 level. And to the bands with the Aussie dollar, US dollar. And here today we saw the market test to within the bands and be very strongly rejected from there, sellers taking control. It suggests we have still a very strong negative bias in this market, following the breakout down below the lower band, the confirmation, and then the market testing to the lower band being rejected from there. And this is a natural way that we see a development of this very strong downtrending price action. So the next move here is suggesting a test at least down to the swing low, or the previous swing low. Just taking a quick look at the US dollar, Canadian dollar with the bands here, and we see a very strong bullish price activity up above the upper band. Very strong positive bias in the medium term time frame. If we do see the market retrace, and we're not likely to see that following this very strong buying candle, buyers in control for the whole day showing strong commitment, but if we do see selling coming in, we'll be looking to strong support at the upper band at 123.60. And with the Aussie dollar, Japanese yen, a very similar type of candle that we saw with the Aussie dollar, US dollar. Sellers in control, strongly committed, being rejected from the upper band, suggesting we have a very strong negative bias in this market. Very real possibility of the market testing lower. The swing low here, 92.14, is the next target, and then potentially strong support coming in down around this area where the market was rejected from at 91.75 at this swing low.